Hello, this is Pattu from freefincal, and in this video let's review the performance of HDFC Mid-Cap Opportunities Fund. This is a 11-year-old mid-cap fund, and it is actually the fourth largest in terms of assets under management. It's quite a popular fund, and it has been an excellent consistent performer. But the one problem with this fund is that its AUM has doubled in the last few years, from about 2015-16 to now 2018. So so far the fund manager has done a wonderful job of managing the fund, even though such a large influx of AUM. In spite of that, he has managed it so well. It has been the same fund manager since inception, and that's also a positive as well as a negative for the fund. We don't know if the fund manager quits, how the fund will perform. So that's also an unknown. So let's dig deeper. So the fund is currently benchmarked to Nifty Midcap 100 Total Returns Index, and this is the since inception growth of the NAV and the growth of the benchmark. It's a normalized growth from 1. Of course, this kind of performance only the NFO investor would have got. So an investor who invested afterwards in later years would not have got such a wonderful outperformance. We'll have to look at the rolling returns for that. So let's do that. So this is the rolling return chart for every possible 5 years since the start of the fund to the present. I have used the regular plan for this, and therefore for the direct plan the returns will be about 1% higher. So there are, in each of those black and red curves, there are 1563 5-year data points in each of them, and you can notice that the HDFC Midcap Fund has comfortably bet the Nifty Midcap 100 TRI. Notice that the gap between the fund and the index has kind of decreased in the last couple of years or so. It's I mean, we can only speculate whether this is due to the market or due to the large AUM and so on, but it's something that one should keep an eye on. That is all that we can say for now. And this is for the same 5-year period, for every possible 5-year period. This is the rolling risk or the standard deviation. This is a measure of the daily volatility in the NAV of the fund and the benchmark. Notice that the benchmark has got, the fund has got lower volatility than the benchmark. So the fund manager has done a wonderful job. He has reduced risk with respect to the benchmark, and he has also enhanced returns with respect to the benchmark. And so that's essentially justifies the expense ratio the investor pays to the fund. And now we look at the similar graph for 10 years. Of course, for 10 years we don't have much data because it's only an 11-year-old fund. So we have only about 334 10-year data points in each of those red and black curves. But again, still you can see the outperformance. It's fantastic. And similarly, the risk outperformance is also fantastic. I'm not shown it here, but you can look at that in the blog article. Now the question is, how has the performance been over every possible 2 years? The reason we look at this is because in the last 2 years only the AUM has swelled suddenly. So if you look at that, well, it has at least the regular plan has the returns have been on par with the Nifty Midcap 100. So the direct plan will be a little higher. So the outperformance that's seen in the center of the graph from between November 2011 to 2015 or so, that has kind of decreased. That seems to have decreased in the last couple of years. Of course, during the 2008 crisis also it has decreased. Now it is again, like I said, I would like to repeat that we don't know whether this is because of the market or because of the AUM, but it's something that existing investor should keep an eye on. And of course, it's better always to because the AUM has increased so much, it's better for the existing investor to lower expectations of performance from this fund. And also for a new investor, I think they should be a little careful and they should not look at the past performance, long-term past performance especially, and assume that it will be repeated in future, because in the past the fund was actually had a much less AUM, and so it was probably easier to manage. Going forward, that may not be the case. Now I have something called the fingerprinting tool. So essentially it looks at monthly returns of the fund and the index, the Nifty Midcap 100, and it bifurcates the performance into 4 bins. So you have starting from here a bin where the returns fall under the monthly returns fall under fund outperforms the market. Fund outperforms the market when the market is going up, but underperforms when the market is going down. Fund underperforms the market, and here the fund outperforms the market when the market is down and underperforms when the market is going up. Now you don't want your fund to be here too much or underperforms. You also don't want your fund to be here. You don't want the fund to perform only when the market is going up and underperform when the market is going down. Then you might as well be in an index fund, right? So active management essentially means that the fund's data points should stay in the in this bin and this bin, and inevitably some data points will always spill into the underperforming region. So you can see that this is the since inception data, and you can see that typically the fund has done quite well. Most of the monthly returns fall in desirable bins, and some of them is in the underperforming the underperforming bin, but that's inevitable. That's going to happen with an active fund. It's just that it should not be too much, right? And you can see that the fund there's no point there practically just about a couple of points in this bin which is not desirable, right? So that's fantastic returns. In the blog article I would also pasted the graph for the last 2-year performance, where some of the points, where about half the points are in the underperforming bin. Well, that's seen also from the rolling returns. So all in all, it's a fantastic record. There's no doubt about this. Now, one question I always ask is, does the fund have downside protection? That is, if the let's say the benchmark falls by 10%, that is the benchmark return over a month is minus 10%, the fund's return should be something like minus 8% or minus 7%. It should not be minus 12%, right? Then it's a problem. So that if it is minus 8%, that means the benchmark, the fund has only captured 80% of the benchmark's losses. So that's what we are looking at here. We are looking at the downside capture since inception, and we're also looking at the upside capture. So upside capture is just the opposite. So in a month, let's say the fund has returned plus 10%. You find out the index has returned plus 10%. You find out how much the fund has returned, and you would like the fund to return higher than the index. So if the fund has returned, let's say 8%, then it means that it has only captured 80% of the benchmark's upside. So that's the upside capture and downside capture ratios. You can see that since inception. I put the 100% line right here. So you would, ideally speaking, you would like the downside capture to be always below 100%, which means that the fund does not capture 100% of the benchmark's losses. And well, you always like the upside to be higher than 100%, but in every fund with a consistent track record, you can see that the upside will always be less than 100%, but the downside will also be less than 100%, and it will be comfortably less than 100%. And the fund has, in this case, the HDFC Midcap fund has done a wonderful job in terms of limiting the downside risk to the investor with respect to the Nifty Midcap 100 total returns index. That's over a 5-year period, every possible 5-year period since inception. You cannot ask for anything better from a mutual fund. That is the reason why investors have flocked to this fund. I mean, it's a fantastic performer. There's no doubt about it. I'm sure most investors do not look at downside protection or risk. They just look at returns. But the point is, as an investor, I don't want just returns. I also want my my portfolio or the NAV to fall less than the fall in the index. So you should look at both. And it's in every way possible, this is a fantastic fund. But its biggest plus is could also be its biggest negative. So the question is, should I invest or should I continue to invest if I'm already an investor? Well, if you're already an investor in this fund, then I think there's no reason for you to stop investing. Please continue investing. There's no reason for you to do that. However, please keep in mind that the kind of outperformance or the kind of performance that you have seen in the past may not be reproducible in the future because of its large AUM, and that's always better to expect less so you don't get disappointed less. So keep an eye on how this fund performs with respect to the index, but do so from the date in which you started investing. That's very important, because you cannot look at, see, as an analyst, I can look at rolling returns, but these are just every possible data points. But as an investor, for you, only one thing matters. From the date I started investing in the fund, has the fund bet the benchmark? Has the fund provided me downside protection? That's what's important. I have the tools for doing this at freefincal.com. You can download them and use it. Now, for a new investor, should I invest in this fund? Well, you can, but just keep in mind about this AUM issue. So again, you also, the new investor also should have lower expectations, I would feel. Ideally, I would prefer a consistent performer with low AUM that not many people know. So the fund does not hog the limelight, so not many investors know about it and so on. But in this case, I mean, it's a fantastic performer, therefore many people know about it, and so there's nothing wrong in investing in it, but just keep your expectations a tad lower. So that's it. I'll catch you again in another video, and do subscribe to this channel if you have not, and accept the push notifications by clicking on the bell icon, and I'll catch you again in another video. Bye bye.